Let's take a look at the markets now. Shares were mixed in Asia on Tuesday, with Chinese markets retreating despite a good run on US markets. Hong Kong tech stocks had a particularly bad day, with that benchmark falling by over 2%. The Nikkei share average ended the session up 0.46%. The Hang Seng index declined by 2.35%, while the Shanghai Composite Index ended the day flat. US markets surged in yesterday's trade as market participants speculated that the next round of reciprocal tariffs may be less severe than previously expected come the beginning of April. It's thought that the tariffs set to be imposed won't affect as much of the economy as previously thought. Tech stocks performed particularly well, with Tesla shares driving up 12%, their strongest performance since Donald Trump retook the White House. The Dow Jones Industrial Average rose by 1.42%. The S&P 500 gained 1.76%, while the tech-heavy Nasdaq ended the session up 2.3%. All right, taking a look at our local indicators, we see that the all-share index is currently trading in positive territory, up 0.5% at 89,406 index points. On the currency front, the rand is trading at 18.18 against the US dollar, 19.66 vis-a-vis the euro, and 23.53 against the British pound. And on the commodities front, we see that gold is trading at $3,021 an ounce, platinum at $979 an ounce, while Brent crude oil is trading at $73.37 a barrel. All right, let's get into discussion now with Martin Smith. He's a portfolio manager at Anchor Capital. Martin, thanks very much for joining us as always. So why has sentiment suddenly swung about the Trump administration's tariff stance? And isn't this issue really just a fluid one, given that policy appears to be made on the go with no certainty whatsoever?
It's a very good summary of what's going on at the moment. And you might say it's negotiating tactics by Mr. Trump or President Trump, because you've seen threats and then pullbacks with threats and the like. But exactly what you're saying, it seems like the tariffs are going to be a lot more specific and targeted. And he said he's also going to be a bit more flexible insofar as kind of implementation and discussions around it. So that seems to have kind of cheered up the market a little bit. You saw the Nasdaq up about 2.5% yesterday, S&P up about 1.8% last night. So looking a bit more positive, but like you said, it's an ever-evolving story. So let's see how we go.
So gold being above $3,000 an ounce, that appears to have become the new normal. Do you expect this to be the case for much of the rest of this year? And is it too late for investors who may have some funds, set aside that want to invest in gold counters, for example, the likes of Harmony Gold, because they want to take advantage of the higher gold price?
Yeah, so I mean, it's a tricky one because gold is notoriously hard to forecast in the short term. And it seems like some of the relationships that have previously held around inflation and interest don't always necessarily hold these days. The one thing that does hold with gold is when there's uncertainty, the gold price has a bit of a rally. And that's what we've seen, especially in the last kind of 6 months or so. So gold really has kind of pushed very hard on the back of the uncertainty we've seen in the markets. Whether or not it continues is a little bit tricky, but it has run very, very hard. And I think you've got to just view it as an insurance policy for uncertainty and uncertain times. So whether or not we're kind of at the end of that kind of uncertain road, I think depends, again, on President Trump and the like. But again, I think gold is one to view as an insurance policy. But I'm not sure if we're going to see a year like we saw last year on the gold front, given how hard that rally was.
So yesterday was a tough day for our resources counters. They closed in the red. Well, with the whole market closing in the red, they drove that close. But what is the story with resources? How do you see those panning out for the balance of the year? I know it's subject to so many variables.
Yeah, absolutely. Not all resource counters are kind of made the same insofar as the exposure that they have to various kind of commodities. The two that have really been doing incredibly well this year has been gold and the PGMs, the platinum shares. So those two have actually driven a lot of the performance that we've seen on the JSE kind of year to date. And I think what we've seen in the last little bit, the last couple of sessions, is some of those PGM stocks, the likes of Implats, Sibanye, they've pulled back a little bit. I think a bit of profit taking, a little bit of just kind of catching of the breath. So that's kind of, I think, where the big action has been so far on the JSE. The rest of them, Anglos, the Glencores and the like, it's kind of been just kind of keeping its head above water, but the PGM and the gold side of things, that's where it's really been going.
Right. So yesterday we didn't get to cover a couple of stocks that were interesting in the education sector. Advotech and Stadio, they came out with their results. I just wanted to get from you an overview, your thoughts around these stocks and, your view around whether they're worth investing for the long term, because these are education stocks and we know that we do have education deficits in the South African economy and the government is not really able to fully cater for all the needs in the country.
Yeah, absolutely. So, I mean, education stocks are ones that we like. We really structurally, we really like the stories of education stocks and the business models of those companies. And they're all a little bit different. Obviously, Stadio is more kind of tertiary, and then Kira and Advotech are kind of more in the kind of school space. But on the whole, we really like the kind of space that they operate in. But I think what you've seen is that the school stocks have been a little bit susceptible to what's going on economically in South Africa. And I think with that being a little bit under strain, you've seen those stocks taking a little bit of a hit, specifically on the Kiro side of things. But I think on a medium to long-term view, I really do like those stocks. I think Advotech has been a bit more steady in the growth that it's kind of produced. And Kiro, I think now, given what's happened to the stock in the last kind of few months, I think from a valuation perspective, it's actually looking very, very cheap and very attractive.
All right. Thank you so much, Martin, for your time and insights there. That was Martin Smith. He's a portfolio manager at Anchor Capital.